In this video, we will talk about crypto. In this video, we will have the CEO of scifn. Also, he is a board member there. Also, a professor for four different universities. A Forbes writer, contributing writer. Also, a TED Talk speaker in terms of blockchain and AI. Also, he's organizing blockchain events in New York City. So, without further ado, Jamiel. Hello, Jamiel.
Hey Neil, how are you? Glad to be here.
Uh, yeah, good to see you, and thank you for being here. Even you are in the different side of the world. So, are you recording, or are you in New York right now, or in US?
I'm in New York City and I just came back from spending a week and a half in Nairobi and a week and a half in Indonesia, Jakarta, and got tanned up. And now I'm back in New York for a few weeks. It's freezing here, and I'll be back in
Winter
Asia,
time,
back in Asia in April. Yeah.
right? So you were in Kenya. So did you like see the migration there, or it's not the season?
I actually, as soon as I landed, I got to work. I have meetings with the regulators there around crypto stuff. So as soon as we landed, meetings. Next morning, meetings, and then to the airport to go to Asia. Got to Asia, meetings. Uh, I didn't even get to see the zoo or anything like that. Maybe
Right.
the next trip. So
Yeah. Yeah, there's a lot of time for that. But since you've mentioned like there's a lot of meetings regarding blockchain regulation, so let's jump in. So I
yeah,
have
yeah,
a question. The market, as we know, is back to the levels like we have not seen in the past 2 years already. So
yeah.
what is your sense of like what's happening now in the market? Is it triggered by the institutional adoption, or maybe it's because of the halving that it's soon to happen? So aside from where we are now, how do you see the crypto market play out in the next years?
Yeah, I think so. I wouldn't call this a bull market. It's bullish. It's a kind of a there are bullish elements to it. I wouldn't call it a bull market. What I think is a recognition of value. So underlying value of certain tokens, such that these tokens represent true potential growth of some organization or some project. And when we had this, the Sam Bankman era fiasco of collapsing crypto prices and things like that, uh, there was maybe an overselling. And so even projects that are bringing real value, real revenues were oversold. And I think there's a recovery because there's a realization that what crypto brings in terms of the tokens represents value, economic value. Organizations that are producing economic value, they have employees, they have revenues, they have profits, they have products, they have services, right? And so I think the underlying economic fundamentals um, in many of these projects are sound. And so we've gotten past the hypey kind of frothy crypto world. This doesn't mean that we're not going to go back there again. We could easily slip back there again, but we're now, I would say, in a place of a more rationality. So I would say that it's value proposition, rationality. People are like, hey, there's something real here that's occurring. And a lot of that is being, I would say, is acknowledged by the institutions, or the institution are saying, yeah, there is value here, there is utility here, there's purpose here. Um, Bitcoin has a role to play, uh, but the rest of the crypto world has a role to play as well, right? So you have these amazing products and projects, and they have a place in society. They have a place in the economic reality of society, and so then these tokens should have some value, right? There should be some value proposition behind these tokens. And I'm going to diversify my portfolio to include some of these tokens. So you have some great tokens, and that has stabilized the market, right? And so I think we're at a point of stability, this confidence, significantly reduced volatility. Even Bitcoin is less volatile. ETH is less volatile. So all these tokens not only just moving up in prices, which is not the only metric I look at, but also they're less volatile, which means there's more confidence. There's less uh, that means there's more information, better information being disseminated through the community, and therefore that leads to lower volatility. If we've got all kinds of misinformation, then you'll have mispricing and you have volatility. But what we have is better information. We're still having some issues with misinformation. Clearly, people, saying things about crypto, even crypto people promoting things that are they're not necessarily factual and they're fraudulent. But I would say if you look at like the blue chip tokens, the top really, let's say 25, 30 really strong projects, there's stability in pricing. I think some of the lows have been maybe a year ago, 15 months ago, it was some of these tokens were hit their lows and we're past the, let's say, 52 um, week lows, and we're kind of not even near that anymore. So I would say that these are very strong and positive elements of the crypto world. And I do believe asset tokenization is the future. I do believe in the US, the capital markets will be completely tokenized in 10 to 15 years. And so I think that realization is helping to like stabilize the market. Um, and I would say that crypto is becoming more and more mainstream and people are becoming more and more educated around what they trust and what they don't trust.
Right. Very well said. And you've mentioned regarding misinformation, like there's a lot of fake news. So if you are like a newbie or just really dabbling in cryptocurrency, how do you guard yourself from like this misinformation, from this fake news, so that they won't be scammed?
Um, So I get that question quite a bit, and I think there's like two or three things that everybody should do. Number one, I would say the most important thing is like get plugged into the right community, like work with the right people, like you and Marvin, and kind of the videos that Marvin puts out, right, and the things that Marvin does in terms of events and things like that. So, um, and Marvin's one example, and there's globally there's a lot of examples. We run a community in New York City. It actually is the biggest local community in the world. It's called Blockchain NYC. We're about 40,000 people. We're education oriented. Like we don't allow anybody to sell anything in our community. You can't come up and pitch anything. So recommend people to connect to the right community and build relationships with people that have, I would say, a track record of telling the truth, right? And make sure that those people are in your circle. Um, and that's going to help distill the BS from the signal from the noise, right? That's going to help with that. And two, always go to the sources of the information and read the source documents. Like if you're gonna put money into a project or invest in something, read the white paper. And some of these white papers are technical, but get the assistance that you need to understand what is this project about, and do your due diligence around what is it about, who are the people that are behind it, what's the track record of the people that are behind it, and that alone will help you eliminate 90%, 95% of the nonsense in the market. In the case of like Sam Bankman, um, there was uh, you know uh, much more illusions. There were more illusions. Him coming from MIT and things like that, he was able to propel this kind of image of kind of awkward genius, and that is hard to overcome for a lot of people. So uh, some people would have done due diligence on him and said, well, he looks like, this and this and that. But if you have done real due diligence, which is open up the balance sheet, looked at the financial records, you wouldn't have, no, you would not have access to that. Um, and that should stop you right there. But if you had access to it, you would see there would be problems, right? So I think hanging out with the right people and then doing the proper due diligence with the right people, if you're not a financial expert, then you might not be able to do the right due diligence. I can remember I was teaching at Columbia Business School in the summer of 2019 in New York, and I had a guest speaker in my class. It was the CEO of Celsius, right? Alex Mashinsky. He came in and spoke. Uh, and I never paid attention to what he was doing, Celsius was doing, because I never put any money into it. And in the class, he said that, and this is recorded on video. He said that we pay 16%, 15%, something like that to our depositors. And I asked him, how do you how can you pay 15, 16%? That means that you're lending out just, at 18, 19, 20%. In order for you to justify it, you need a spread. In order to pay that much, you need to be making more than that. And his response, and so I said, who are you lending to? And his response was, we're lending to hedge funds. And at that point, a red flag went up, right? This is in 2019 in the summer. And in the classroom, and it's full of like MBA students at Columbia. When he left, I warned the class. I said, hey, some of the stuff he's saying doesn't make sense. Now, I'm not going to call him a liar. I'm not going to say it's a fraud. I didn't know. I didn't do my like a deeper due diligence, but there was initial red flags around Celsius and Alex Mashinsky. And this is on video recorded. I warned the class and said, hey, I think there's something's not making sense. This requires a deeper analysis. At the same time, Alex was talking heavily about decentralization. His pitch deck was decentralization, decentralization, decentralization. But then he was like, "Park your money with me," right? Which is like, "Hey, put your money with me," and it's pure centralization, right? So there's a dichotomy of messaging. Uh, so like, don't get allured by the returns of something like 15%, 20%. Do your due diligence. Real things grow at a slower rate. Real economic growth typically occurs at a slower rate, 5%, 7%. And so if that's what you're getting, then maybe that's probably more feasible. If somebody's offering you 20%, the obvious red flags and walk away from. So I would say, like, uh, connect to the right community, learn to do the right due diligence and do the right due diligence, and then go to the sources of these information to be able to evaluate before you invest. Which is the equities market is full of equity analysts that do exactly that. And so do what an equity analyst does with equities. Do that for crypto, and equity analysts get on earnings calls. They question the CEO. They question the CFO. Um, do the same thing.
Yeah, like that's a lot of things that would really safeguard everyone if they are new in the crypto, plugging into the right community, going to the source. Thank you, Jamil, for that. And
Yeah,
because there are people who are really just wanting to learn, but they really don't know. And sometimes they can be easily deceived because of their credentials, of how they speak. And sometimes you won't see the inconsistencies in an instant.
right.
If you will be investing right now as a first timer, just like some people who are watching right now in the crypto space, what will you do, like as a first timer, like what will you do?
I mean, as a first timer, if I have time to do the due diligence, I would spend time on doing that. If I don't have time to do that, let's say I have $1,000 and I want to, like, I would probably say, you know what, I'm going to allocate across some of the major tokens, right, in some kind of weighted distribution, right, and it's kind of like an index, right. So I'm gonna look at the top 25, top 50 tokens, and allocate $100, $150 to each, and I'm diversified. And if one does really, 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 really well and the rest fail, then I'm still okay. I might break even. I might actually go beyond that. That's not necessarily a bad strategy. I would stick to what I would call these blue chip tokens, and avoid the kind of like the hypey new ones that are promising an amazing future and things like that, which tend to be the newer ones. The blue chip ones tend to have organizations behind them. They tend to have legacy and history and infrastructure, right? And they have things at risk, right? Whereas the newer ones might have not much at risk. They've created a white paper, they issued a token, they've got a advisor team, 20 people, 15 people, and they're pushing the marketing. Not much at risk, not much invested. And so if you're new at crypto and say, look, I want to jump in, I don't know where to start. I've got $1,000. But I want to jump in quickly. I don't have time to do my homework. look at, just go to like a CoinGecko, or and look at the top 25, top 50 tokens by market cap, and say, you know what, I'm going to divide this $1,000 across these tokens, right? And then you find an exchange that has these tokens. Most exchanges have like the top 25, maybe top 20, and you distribute across that, and then you are in a position to gain. Um, if the market continue to moves up, you gain. If it goes down collectively, then everybody's losing. So if you're losing, not a big deal, right? Uh, but that's if you want to be a passive investor and say, hey, I want my skin in the game. I would stick to the kind of top stocks. The top cryptos for now, and then until you become more comfortable, you get more understanding of how to do the homework, how to question people, how to look at token behavior on chain, see what's happening to that token, you know who's painting the tape on the token, how is it being traded, looking at the liquidity and all these other factors. Once you get more proficient with that, then you're like, okay, you know what? I'm going to move towards this token more because I can produce better alpha here. Whereas if you're coming in and saying, look, I just want a piece of the action of the crypto world, but I don't want to take a lot of risk. I really don't want to lose a lot of money. I'm willing to lose a little bit of money if the case is that the market tanks, then you position yourself. But then if you're more sophisticated, then there's all these other opportunities like perpetual contracts and derivatives and things like that. That requires a bit more thought and process, but you can hedge your risks. You can increase and leverage your ROI, and I think those are for more sophisticated people. But if you're looking to start immediately and you're new at this, that is a good way to start. And it's a way that I've my that's what I tell my family members. It's just like, oh, I want to be in crypto, Jamil. I'm like, all right, look, I don't have time to do your homework for you, but take the 20 here and put some money and sprinkle it across. And you're in crypto now, bro. You're a crypto bro now.
Crypto, bro. Yeah, like what you said, invest on having the due diligence, get your skin in the game. Like even if you are just starting, you can just start small, and don't just like invest on one token with everything that you have. So that even if you started small and if it will not work out, at least you still have some funds to try for the other rounds.
Yeah,
And that's really good what you said.
yeah.
So with that said, like going back, because the crypto space now, like there's more sentiment shifting to it, what would be your approach now? Like how would you go about it because of the shift now? Like you said, it's not yet a bull run, but like, okay, knowing with what is happening, what would be your like approach or your strategy with what's happening now?
In terms of investing and trading, or in terms of what?
Yeah, it can be investing, it can be trading.
Yeah, I think like my personal opinion, this is my opinion, it's not investment advice, is that we are still at the beginning of what will be a revolutionary technology and a revolutionary way of doing financial functions, right? And so, if anything, this recent stabilization in the crypto market is further evidence and indicative of the strong future that blockchain will play and tokenization will play in financial markets and capital markets. And so, uh, if anything, I personally am significantly improving how I do my due diligence. Whereas maybe 5 years ago when I got involved with crypto, well, actually 7 years ago, it was more reckless, right? It was like, oh, that sounds cool. I'll take it. I'll buy it. Now it's like, hey, there is, and at that time, 7 years ago, due diligence may not have been even possible. You don't know who the team is. They're not going to answer your phone calls. They're on Telegram. They're not answering you and things like that. Today, due diligence is very much possible. So I would say like the ability to like do real work and think of the crypto market as a professional market. It's a sophisticated market. It's not a market for like anymore for just a bunch of degens or yahoos or kids or you know a couple of bros. It's now a global diversified thing um, that will and people call crypto a asset class. I would say that it's not an asset class. It is a way to represent all asset classes, right? Equities and fixed income and commodities and things like that, and it will permeate um, the way we do finance across the board. And so I think we're at this point now where sitting down and saying, I need to take this seriously. I need to take crypto seriously now. This is a good time to do that, right? This is a good time to do that because we have this kind of foundational position now. Um, if anything, I wish we were back where we were a year and a half ago because that was a buying opportunity, right? To go out there and continue to buy. I think we still in a buying opportunity, um, and maybe we're not going to get the same kind of returns as we did over the past 12 months with like where Bitcoin went from basically around 25,000 to now hitting almost 55. So we might not have the same returns in the next 12 months, but I think we are continuing to move forward and upwards on pricing, and the right tokens are going to continue to grow. And I think now is the right time to really get involved in trying to understand the space in a scientific way, right? And whereas before it was more emotional and you know word of mouth and rumor, now it's like I can be involved in a scientific way. There's a rigorous methodology that I can apply that will produce results for me in terms of producing and generating alpha. So I think that is something that excites me right now. Around, hey, I can tackle the crypto market as a professional, uh, using professional discipline and tools, which didn't exist before. It wasn't there before, um, and that's a part of the maturing. Crypto is now maturing. I think we're going to move into the era where crypto becomes mature. All right, and it's what mature people invest their money into as well. Whereas before it was like it was a fad or a fun thing or a cool thing. Now because the institutions have moved in, and I do, let's say, buy an ETF, a professional advisor, financial advisor now has a fiduciary duty to uh, make sure my ETF investments and my Bitcoin ETF investments are hedged. Their risk, it's the right allocation, it's the right percentage. It's not, my portfolio is not overweighted and things like that. There are professionals now looking at Bitcoin and eventually ETH and other tokens. So I think this is an exciting time for the crypto market. Um, it's a time where people should come in and say, you know what, I can start to rely on my research, whereas there was maybe less so possible in the past.
Right. Just like what you said, it's really amazing what is happening, especially with Bitcoin price is surging, Ethereum is surging, some coins are surging, and you said like the prices are going up, and there are still some buying opportunities. So, what to look out for in terms of, let's say, you will buy a crypto? Because again, like for the first timers or newbies, okay, Jamil said there are still some tokens that can have a buying opportunity. But if you will buy, what is like your filter? What will be your like your gauge so that you will say, okay, this is something that I will buy, or at least will consider to buy.
Yeah, I like my personal. I only invest in tokens that have real products and not dreams. I don't invest in dreams, uh, which means if that dream does come to reality, I've missed out on a big upside. But I'm okay with foregoing a big upside with more conservative upside with less downside, right? And I think that's where I am on the spectrum of like risk reward. I am to the left of like taking risk. I'm a little bit more risk accepting, but at the same time, I am also risk conscious. And so crypto was is seen as, well, I can make exorbitant returns in the crypto market. That's how it's seen as. I don't see it as such. I see it as I can maybe beat the equities market in alpha generation, and then I'm okay if I beat the equities market by, let's say, 2% or 3%. So let's say the equities market gives me, let's say, a 12% return, and crypto market gives me a 15% return this year. I'm okay with that, right? Whereas people are looking for 20, 30, 5x, 10x, whatever they're looking for, right? So that is where my starting point is. And what am I okay with in terms of returns? And then from there, what does that mean in terms of my how strict do I need to be on my due diligence, right? So I reverse back from a target back to how strict I need to be on my due diligence to so okay, what tokens do I need to filter? And so in order to get that guaranteed upside with not guaranteed, but like a more conservative upside, which is easier to get, generally speaking, with a lower downside. Um, what are the set of principles and things that I need to look at in a company or token project? And what I've come up with is, one, they need to have a product, and I need to identify their customers for that product, right? For example, Chainlink, great company, great product, they have customers, right? So, um, okay, yeah, I can look into this company. If there's a token, I can't identify their product, or even if I can identify their product and I can't identify who their customers are, who's using that product, I'm done. I don't even need to. It could have Elon Musk as the CEO, doesn't matter, right? What matters is, are their customers using the products that they're using, and are other customers talking about their products in a very positive way, right? And it's not just one customer, one marquee. It's like there's a large number of customers that are using this, and then I think there's opportunity there. And in so many ways, I'm just looking at it as equity. The way I look at crypto is the way I look at equity, which are how equity analysts look at it. Are there products and services? Is there demand for the products and services? Are they improving on their demand? Are they fulfilling the demand? Are they growing? Are the customer base growing? Is the revenues growing? And that's the way I look at these tokens. And there's a bunch of companies that do fit that, right? I would say like Chainlink, Arweave, there's a bunch of other ones. And I'm not recommending these tokens, but if you look at these tokens and these organizations behind them, you see that they're real business, right? Now, can they squander money, misallocate their money? Is there room for fraud? Can somebody come up and say, you know what, our books, this and this and that? Yes, that's there. But then that's for me is an acceptable risk, right? I will try to do my due diligence enough to be able to see, like, hey, maybe there's no room for fraud here. I can see their books. I can see if it's on chain. I can see what's going on, and if I rely on that, that's great. Um, but there's always opportunity, and that's true in the equities and capital markets, right? Enron and all these other companies were thought to be great companies, and until we found out that they're not, right?
Yeah.
And so that can happen anywhere, right? So uh, that's the way I approach token. It's like finding alpha above the equities market, finding alpha above the equities market without, and in some sense, some cases having less risk than the equities market with the right tokens. And that's done. I have a team. We do trade, uh, um, and that's what kind of what we focus on. And it makes money, right? And I think it'll make money for other people.
Right, right. You've mentioned regarding alpha. So especially for those who are joining us for the first time, can you expound on that, like finding alpha?
Yeah. So alpha is the technical definition is excess returns. And so what's excess returns, right? Um, if we were to create an index of any particular market of like the major assets in that market, and we baseline, let's say over a year, what that index did in terms of returns for the year, alpha is anything above it beyond that, right? So the idea is that, you know what, I can be a passive investor. I don't need to do any due diligence. I'm just going to go into a market and buy the top 50 assets, right? Top 50 stocks, top 50 cryptos, which is what I'm actually recommending people do. Just pick up the top 20. Uh, but I can go and just buy one share of every stock. Let's say, for example, one share of IBM, one share of Microsoft, one share of this across the board, and then just watch and see the returns. And after a year, get some returns, right? Um, And that return rate, let's say after the end of the year, is 7%. If I generate 9% on my own portfolio, I've generated 2% alpha, right? And so
Right,
alpha is
right.
the excess return
The
that you
excess
make on a
return.
market against a benchmark.
Right, right. Thank you for explaining
Yeah, sure.
the excess
Yeah,
returns.
yeah.
So, as we were talking about, like, you are starting to buy, like, the people who would want to buy, of course, there will be a mix of like Bitcoin, altcoin, stable coin. So, if you would like diversify your portfolio, how would you do that? Like, what would be your mix with Bitcoin, altcoin, stable coin?
Um, to be honest, I'm not very heavy on Bitcoin. Uh, because I don't know what it is. I'm a proponent of Bitcoin, but in terms of portfolio allocations, I'm not heavy on it. In terms of weights, like it is underweighted in my portfolio because I believe that at any given time it can potentially theoretically go to zero, and nobody can explain why should be at 50 and why it should be at 100. And all the theories that I've studied around why it should be at 100,000, and why it could be at 50,000, why it should be at 25,000, they're all purely speculative because there is no underlying economic driver for its price. People say it's supply and demand, but the supply and demand is a tricky thing. Uh, for example, there's a theory that restricting supply creates demand. It's not true. Yes, restricting supply can create demand, but demand can be zero even as you restrict supply. If I restrict and reduce supply or limit supply, and Bitcoin over time, its supply decreases because people that own Bitcoins under their own wallet, let's say they die, that Bitcoin is gone, right? And if nobody has access to the private key, over time, let's say over 150 years, 200 years, there's an attrition in Bitcoin availability in terms of supply. That doesn't promote an increased demand. That's a fallacy, right? It's a fallacy that by restricting and limiting supply, I create demand. If there is demand and I restrict supply, that can increase the price. But that demand must exist first. So, what is the fundamental driver of that demand, right? Uh, Such that restricting the supply would make that demand cause the price to go up. And I don't know what the fundamental drivers of Bitcoin are in terms of price movement. Why does it move up? Obviously, it's belief and it's hype and it's all these other factors, which can eventually go away at some point in time. It could be entirely possible that Bitcoin. I mean, we know that a few years ago Bitcoin went down to 5,000, right? And nobody was surprised. Nobody's like, "Oh my God," like people were hurt, but like, "Oh, Bitcoin's 5,000. Oh, it's 7,000." It's an arbitrary number. So Bitcoin, it has a unique place in the heart of the crypto world, in my heart, because it's the first thing to do this. So that it's kind of has this cherished, kind of it's like this golden child. Uh, but it has no revenues behind it. It has no products. It has no services, right? It is just a function of some belief system and some supply and demand curve. Whereas other tokens, they have behind them fundamental businesses. And I those were where I overweight. So if you have a business and the business generates revenues and it's contributing to society, it's providing products and services that society needs. We're not necessarily talking about groceries and things, but just like any kind of professional services, like what was it, Chainlink or Arweave provide. Like, hey, storage, I need to be able to do decentralized storage. I need all these services, and you're providing that, and people are consuming those services. Then I say that that token has some value, and so I'm more overweighted there than I would be on Bitcoin side. So I would I would bring it down to like my portfolio allocation is overweighted. The more I can prove that there's a business and there's revenues and there's customers, the more proportionately I am involved in that from a portfolio perspective. That the allocation percentage wise is greater, let's say for Arweave and Chainlink and these other kinds of companies than it would see, like, for example, for um, you know um, Matic, right? I would say like Chainlink is a more revenue based business than even Matic. Polygon. So I am more weighted on the Link and Arweave type of token side than I am on the Matic side, and then I'm more weighted on Matic than I would say on Bitcoin as a overall
Right.
percentage.
Right.
Yeah.
All right. Yeah. So so it's really like the utility of the token you're really looking into. So let's shift into like the Ethereum, even like what you've said, Matic, the layer two. Also, how about the Sage, Sui, the Solana, the Avalanche? What are your thoughts about that?
Yeah. I mean, I think um, the Ethereum world is not the only blockchain world. So I think Solana, Avalanche are bringing great innovation into the space. We're using them in some of the projects that we're involved with. Um, you know, um, I think I have to be careful what I say because we're involved with some of these projects that involve these blockchains. I won't say that. I will say that the dust hasn't settled. There will not be one chain, and then everybody is in the crypto space knows that we live in a multi-chain world, right? And these chains innovate, right? AVAX and Solana are innovating, and they're able to do things that, let's say, Ethereum mainnet can't do, right? In terms of scalability and transaction rates and things like that, right? And so and they're doing interesting and novel things in their design. uh, at the same time, I would say that they can disappear easily. They can go away, they can fall out of favor quickly, and they don't have the liquidity that Ethereum has. And I would say an important part of my due diligence is what's the liquidity of a chain, right? Liquidity is king. The liquidity is the most important thing. And so they're building the liquidity. I was actually, just before this podcast, I was actually on a call with Algorand, right? And so, um, you know, we're bullish on Algorand, but they're facing significant issues in terms of liquidity and things like that. Uh, if these chains can continue to build liquidity, um, then they become more and more viable in the future. That's the thing that I would kind of track. So yeah, I am bullish on these other chains. Uh, and who does well in 5 years? I don't know. I don't think anybody really knows. So I would say that the risk profile for like holding AVAX and holding Solana is a little bit different than, let's say, risk holding Link, Link tokens. I think there's a little bit higher degree of speculativeness or speculation with holding that. And AVAX and Solana have been very, very volatile in the past 2, 3 years, right? Like up
Right.
and
Yeah.
down, right? These big runs, and so I think they're still in the early days. I'm holding both Solana and AVAX, but we know that they fit maybe in a slightly different risk profile. Which,
Right.
by
Yeah.
saying that, that might piss some people off, but it is what it is. So be like,
Yeah.
no,
Yeah.
yeah,
Yeah. So before we go to our final words, just one question. Let's talk about regulation like very quickly because we know like in some countries there has been like some restrictions. Like very quickly, what are your thoughts about regulation?
yeah. I think and we do. I do a lot on we talk to different regulators. Like I was in Nairobi, speaking with regulators. Um, Globally, it's still a mixed scene, right? Even in the U.S., I would say the dust hasn't settled in terms of regulation, right? And we have more mature regimes like Singapore and Dubai and things like that. And I think the world is moving towards a better regulated market. At the same time, that these type of regulations are disenfranchising the ethos of blockchain, which was, you're anonymous, you are self-sovereign in your wealth, your holding of your wealth. The idea of money is that this is my money, purely and entirely mine. Whereas if I hold a dollar bill, it's in my bank account or in my wallet, but technically it's not really mine. Somebody can come and seize it, right? So we're shifting from this very pure ideology of completely self-sovereign wealth and money, and we're moving into a regulated environment. And I'm saying it's a bad thing. I'm saying it's probably a good thing, but we're going to detach a large portion of the community from the original vision and ethos of blockchain. Um, and is it still going to be good? Is there still opportunities? Yes, there'll probably be more opportunities in a regulated environment. The data shows that in a regulated environment, economies prosper, markets prosper, because confidence is the key to finance. And so if I have the right confidence, but globally, like different countries are in different places around uh, crypto assets. I did one presentation with a regulator. Um, and asked him some simple question like, what do you do with a token that at one point in time it's a yield bearing token, and after it bears a yield for a year, it turns into a collectible? Is that a security or is that not a security? How are you,
Yeah.
like, and so in the US we've grappled with these kind of issues, but in other countries they're like, what you, a token can do that? I'm like, yeah, a token can do whatever you want it to do,
Yeah.
right? And so the minute it gives you a yield and then boom, it converts into a collectible for whatever reason, there may be use cases where it can do that. how, how do you go you say now it's a security and then it's not a security? Even if you do say that, does the public know? And how fast do they know, right? And what's incumbent on the public, or vice versa? It's a collectible, then turns into a yield bearing thing. Is it like originally not a security, then a security, and things like that? So I think the speed and pace of innovation in the blockchain token economics is so far ahead. Regulation is always going to be like many steps behind, and other countries very, very far behind. If you look at countries like South Africa, um, and even Kenya. I think in Kenya, I think it was kind of like the whole thing is illegal. It's all security, or all it's like actually the way they say, like, this is not in our domain. We don't know anything about it, right? It was kind of like that approach. So they don't ban it, but they're like, hey, this is not something that we know about. And so what happens, that allows all this nefarious activity to occur, right? So crypto is being used for drugs and things like that. So I think lots of countries are ahead on the regulation. They're mature. Then there's countries like the US that is dealing with it and grappling with it. And we have our own political issues, the Gary Genslers of the world, who are like maybe making a bit of noise, unnecessary noise. And then you have countries that are like, we don't even need to think about this today. But they do. And I think some of them are starting to.
Right, right. Like, thank you for sharing the things that you are passionate about. I have a lot of questions, but I know that we can have more maybe in the next time. Thank you, Jamil. Any final words? Also, how can they connect with you?
Um, the best way to connect, LinkedIn. So linkedin.com/in/, my first name. Um, yeah, and I just want to thank you for your time. I love what's happening in the Philippines, right? And Manila. I was in Manila for the first time a couple years ago, and I was surprised at like the intensity of the blockchain community there, right? And everybody there was super friendly, super intelligent, very like in tune with a very sophisticated understanding of the crypto market, which is a refreshing surprise, which doesn't exist in like let's say in other places in the world. So I was very excited and I'm very excited to have to get to know you and get to know to your brother as well, and excited about the future of crypto in the Philippines. So hopefully I can get a chance to come back there.
Yeah. So thank you, Jamil. Hope to see you when you are here in the Philippines. So guys, just say your thanks to Jamil. We've learned so much. You can even comment it below. Thank you, Jamil. It's really an honor to learn from you. So guys, don't forget to like, share, and subscribe. Thank you so much. God bless you.